Okay, folks, good morning and welcome to Swing Trading Today. This is Bob Desmond, and it is Tuesday, December the 12th, 2018, at current 4:38 in the a.m. Eastern Standard Time. Let's begin with a headline that caught my eye on Zero Hedge, and this is something that has really troubled me since the event occurred. The article is titled, "Sabotage: Has the Deep State Destroyed Trump's Chances of a China Trade Deal?" Now, when President Trump was meeting with his team over in China, an arrest was made of Meng Wanzhou. She is the CFO of Huawei Electronics. Forgive me if I'm mispronouncing the company's name. And they are essentially, just to put it into context, if you haven't heard of this company, they are essentially China's version of Apple or Microsoft. They are massive, a $100 billion per year in revenue company. Now think about if Bill Gates were over in China and he was snatched up by the authorities for whatever charge. Now I'm not saying that she didn't commit a crime. I'm neither judge nor jury. I do not have the legal background to make that call. But the timing is undeniable. The minute that our president is meeting face to face with the leader of China during a trade war, they snatched their version of Bill Gates. Think about that. And she is the daughter of the company's founder and the heir apparent to the corporation. So this is no simple high-level executive. So the question becomes, is the deep state trying to sabotage the stock market in advance of the 2020 elections? And a couple of questions, alarmist questions, may pop into your mind. You may be saying, 2020 is a long time away, Bob. Why would they choose now? For anyone over the age of 30, 2 years is only around the corner, and just think 2019 is less than a month away. So is it really that far out of the question, considering, in fact, what they have done in terms of attempting to destroy this president's credibility and oust him from office, and they continue to do it. I'll leave you with that. Let's move on to the pre-market activity. I would love to hear your comments regarding this topic. Please leave a comment below if you're watching this on YouTube or if you're watching this on our blog. Let's get to the pre-market activity. Hey folks, thanks so much for watching, and we're going to begin again in just a moment. But first, I wanted to make a really big announcement. I'm really excited about it, and I think you're going to like it too. And the announcement is this: I am going to be raffling off a 1-year gold level membership to the Contrarian Trader. That's right, trade alerts, daily commentary, paper trading simulator, access to the members forum. And I will be announcing the winner on January the 5th, 2019. All you need to do is pause this video, click the subscribe button, click the like button, and you're in. That's it. So don't wait. Enter now. I'll say thank you in advance, and let's get back to the rest of the commentary. Let's begin with the pre-market activity of the S&P 500. We are currently down slightly. I mean, we had a bullish reversal day yesterday, not a major pullback this morning. We are fairly stable. We have a bias to the downside, around 5 points to the downside. We were on this 4-hour chart. These will all be 4-hour charts trading within a triangle formation yesterday. We did break out on price above this upper band of resistance. We have a confirmation of the breakout on RSI with higher lows, and we have a higher high. Now we're looking for a breakout above this upper band of resistance in green. That'll take us up to between 2,660 and 2,676. Now, if we break yesterday's lows, brother, look out below for this market. The NASDAQ, it too has broken out above resistance here in green. Now what we need to see is for it to recapture this prior support level, which it broke on the 7th. And if we rally up and through this resistance level, that'll take us up here to 68.50 on the NASDAQ. Now, very similar to the S&P 500, we have RSI, which had been in a trading range. It broke out. It is now putting in higher lows and higher highs. So the NASDAQ, very stable. I think there's a good chance that we rally today. Taking a look at the US dollar. The dollar surged yesterday, and my belief is that it surged due to the events unfolding over in Europe, in particular France, and the massive riots, demonstrations that they have going on over there. You have to sympathize with the yellow vest protesters. The taxes there are just simply unsustainable, and it's coming to a city, county, state near you in the coming years here in the States, unfortunately, because we are broke. The dollar is pulling back off the highs of the session. You had President Macron of France yesterday come out. He threw a bone to the protesters by offering tax cuts. I do not think that is going to alleviate the situation. It's far bigger than simply tax cuts. It's the globalists versus the nationalists. So I fear that we're going to remain in a trading range here on the US dollar for a while. Now, when am I wrong? Well, if we take out this lower band of support at 96.286, well then, we're coming down here to support at 95.65. But we did break out on a daily basis yesterday. So while we're pulling back this morning, I'm not ready to call a top yet in the US dollar. Not with what's going on in France. Let's take a quick look at the euro. My guess is, I haven't looked at it yet, my guess is that it is rallying this morning. So here we are. We're rallying, but we're nearing resistance. No significant breakout yet. We may have a very short-term breakout here. Yeah, looks like we do. All right, so we're poking our head up now above this upper band of resistance. Let's see whether or not, A, we can close there above that resistance level. This bar, this 4-hour bar, will close in the next 10 minutes. A new one will open up. Then the next target will, of course, be this more difficult resistance level at, let's call it 1.14. So while the euro is rallying this morning, nothing all that exciting happening here. Let's take a quick look at gold. Now, gold, even though we had a strong US dollar yesterday, gold held up fairly well. And overnight, we managed to recapture a resistance level, which was prior support. And now we are threatening to take out Sunday's highs. Remember, we did put in a new weekly high this week. At current, we are trading below Friday's highs. We are up a little over 1/3 of a percentage point on the morning. Now, if you take a look at the price action, we pulled back yesterday. RSI held firm. It is now hooking back up. So gold is looking good. Let's check out silver. Silver looking very good. We also have a new weekly high here. We, of course, did sell off along with gold versus the US dollar yesterday. RSI looking pretty good. So we have silver, which is actually outperforming gold right now, as it is up above a 0.5 percentage point. So silver, of which we are long, looking very good. Natural gas remains in a nice trading range. We are down this morning by a little over a percentage point. We're seeing a little bit of weakness here on RSI in that we are putting in lower highs and we are threatening a new lower low here again. A few minutes left in this 4-hour bar. We have 6 minutes left. It's probably a lot to ask to reverse this bar, so we're probably going to break down here a bit on RSI. But again, the higher level view here is that we remain in a trading range, a consolidation. The weekly chart looks good. We had a massive run up not too long ago. Here's that massive run up. We're consolidating those gains. So the path of least resistance remains to the upside, despite the fact that we are down this morning on natural gas. What else do we want to talk about here? Bitcoin. So Bitcoin, I asked the other day, do we have a bottom in on Bitcoin? And not much has happened here. We have really hugged this resistance level for the past several days. Now, while not much has happened in terms of price, we do have a significant breakout on RSI. And you can see that we had broken out above resistance here on the 9th on RSI. We're pulling back, retesting the breakout point. What was resistance is now support. So again, I'm not going to be the least bit surprised to see a pop higher here on Bitcoin. And my guess is that if we rally up and through this resistance level, which was prior support back here on the 26th of November, we will probably see buyers move in and take Bitcoin up to first 4,005, second resistance level up at 4,365. So watch for a pop here on Bitcoin. I think we're moving higher, despite the fact we have been unable to rally through resistance. Now, what will help Bitcoin, or should help Bitcoin theoretically, is more geopolitical risk. But I would not be a buyer right now simply because we have RSI, which is moving higher. We want a confirmation of the breakout in RSI on price as well. Folks, now let's segue over into our gold members stock chart request, which is where we review the symbols that our members submit for me to review on video. Let's get to it. Okay, folks, let's segue over and into members stock chart request. This is where we review the symbols that our members submit for me to review on video. Let's get to it. First symbol up here is EQH, AXA Equitable Holdings, daily chart. There's not much data here, so I'm just going to go to a daily chart rather than a weekly chart. We are at all-time lows on this stock. We hit it on Monday, but this sell-off here is a bit overdone, and I think that we're poised for a bounce fairly soon. This downtrend here, this upper band of resistance is really, it's just simply unsustainable. Now, when you take a look at your Stokes, it appears as though we're putting in a W formation. You know how I love those. We have the fast line on Stokes beginning to hook up, yet we don't have a breakout yet. So, are we ready to buy it yet? No, not quite yet. What I am curious about is how we're looking on an intraday chart. Let's check out the 2-hour chart first. On a 2-hour basis, we have a beautiful double bottom setup on RSI. Now, I just mentioned on the Stokes daily basis that the Stokes were setting up nicely, but we had no breakout yet. However, when you take a look at the 2-hour chart, which admittedly, especially in this market environment, is a volatile chart, the stochastics are breaking out. We do not have higher highs yet, but my guess is that we are going to push higher here. We did break out late Monday afternoon. We did rally up and into resistance at about 1740 per share. We closed out the day on Monday on volume into the close, which is good stuff. Nice double bottom setup in green on ADX. So I think that we are poised for a pop here on AXA. Purely a short-term swing trade. That's it. Now let's take a look at the 4-hour chart, because now I'm really curious. And for this view, we're going to use Thinkorswim. And I'm going to throw some lines up here. Color them up a bit. Okay. There's our price. Now we'll do up RSI. Okay. So price action on a 4-hour chart is not sexy. There's nothing going on here that would inspire me to go buying shares based purely upon a 4-hour chart. That's price. However, what I do find interesting here is RSI. And RSI broke out here on the 6th of December, if you could believe that. And we've been vacillating here to the downside, yet RSI has been lethargic, trading sideways, but it is now beginning to move up. So the 4-hour chart looks interesting. Again, not much happening on price. Ideally, you'll want to see price validate RSI and vice versa. But it's an interesting setup. So I would certainly not short these shares. I think that there's an opportunity for a short-term swing trade here as an investment. I think we have a lot of backing and filling to do before we're ready to talk about an investment on EQH. The next chart up, NVAX NVAX, weekly chart. An interesting play here. We were in a triangle formation. We broke out last week. This week, we're retesting the breakout point. No new weekly high yet, but this is a chart that's beginning to shape up a bit. Now, if we rally up and through $2.25, we'll probably head up to the 250 to 275 range. We have Ultimate Oscillator putting in higher highs and higher lows. Stokes looking rock solid. I mean, this is what you really want to see. This is when stocks take off. Not down here when they're hooking back up. It's when they rally, pull back, and your Stokes hook back up. You get your higher low. That's sexy stuff. So on a weekly basis, the chart is looking very good. We have a breakout on price. The RSI is breaking out. So we have our indicators, our forward-looking indicators. RSI, Stokes, confirming the move. Daily chart. Daily chart, RSI, higher lows, no higher highs yet. We're looking for a breakout above last week's highs. We are in a triangle formation on price. We were rejected at the 2.2 level on Monday. I would wait here for a close above 2.25. If we appear poised at 3:55 Eastern Standard Time one day this week, ready to close above the 2.25 level, that's your opportunity to open up a trade to the long side. But just keep in mind, you have resistance at the 260, 250 to 260, then the 275 level. Good volume today, so the chart looks interesting. Now, if you buy the shares on a breakout above 2.25, that's also your stop point on a closing basis. It could easily trade intraday back down to retest 2.15 and then close back above the 2.25 level. I wouldn't worry about that so much. I'd give it a little bit of room. But if we if we close above 2.25 and then we close back down below 2.25, that's a breakout point failure. I don't like that, and that's just a natural sell signal for me. Sunrun, RUN, the symbol. Weekly chart. We rallied up to $15 per share last week. We were rejected at that level. This week, we pulled back so far. We have not yet taken out last week's lows. We are holding support at, let's call it the 1371, 1370 level. Ultimate Oscillator, higher lows, higher highs, good stuff. RSI, higher lows. We're looking for a higher high here. Stokes looking good. Daily chart. Okay, on a daily basis, we have, this is rather a loose application of this formation, honestly. But we'll call this for, to apply a label to the formation. It's a saucer with handle formation. Why am I balking at really applying that label? It's because normally on a cup with handle or a saucer with handle formation, you get a drifting, orderly pullback. This is kind of volatile. Now we are retesting prior resistance. It is now acting as support at the 1350 level. We hit a low on Monday of 1366. I would be okay if you bought these shares, meaning you wanted to scratch the itch, put on a trade. I would not go buying my intended allotment. For instance, if I was going to buy 1,000 shares, I'm only going to buy 200, 250 max right now with a stop right below 1371. And I would buy more on a close above $15 per share. And then add more on a rally up and through 1645. Yes, we want to buy strength. And I like this stock because the markets have been very volatile of late, yet the shares have held up fairly well. They've been consolidating since the beginning of the summer. So this is a nice base from which to break out of. RSI is right at resistance. So run is looking good here as a long trade. Big lots. Let's begin here with a monthly chart. We really want that higher level view. The shares have really taken it on the chin of late. Now, from a monthly view, it's obviously a broken stock, right? We have lower highs, lower lows. The path of least resistance is to the downside. We are probably going down to, I would say at a bare minimum, down to 27.50. Does that support level hold? I don't know. I'm not that smart. We're rolling over on Stokes. Lower highs, lower lows on Ultimate Oscillator. The stock is a basket case. Now, is there a trade to be had here looking at the daily chart? It's setting up. 27.50 is where we would look to get involved. One might argue that the rising 200 period moving average would act as a support level. Maybe, but I would prefer to see 27.50 because as it stands right now, with this kind of volume, this is institutional distribution. My buying is not going to overwhelm these institutional sellers, right? So these are the big dogs. I am not a big dog. My buying will do nothing to influence these shares. Now, we did close down the day below the third standard deviation Bollinger Band in red. We could simply trade sideways here and alleviate that quote-unquote oversold condition relative to the third standard deviation Bollinger Band. Were we below the 20 level on RSI, I would be more bullish on the shares, but I think that there's more downside risk here. So going back to the monthly chart, I look at this chart and I say, okay, where would there be a good entry point for me to begin accumulating shares of this stock? And it would have to be at a bare minimum, $27.50 per share. And it could quite very well overshoot to the downside down to a 24 handle. So right now, I don't see a good risk reward entry point to buy these shares. And if you did, let's say hypothetically, we didn't make a new daily low today and we bought the shares. You're going to accept a lot of risk for not much upside potential because the minute we hit $32 per share again, you can bet your bottom dollar you're going to see a flood of new sell orders. So really, what's the sense here? I think there's better opportunities out there. I would wait for lower prices. They're coming. Can we have a counter trend rally? Sure, but I think longer term, we're rolling over here and we're going lower on big lots. The next chart up, PPLT, weekly chart, physical platinum shares. Never heard of it. It's an ETF. Okay, so I like the precious metal space right now. Platinum is a question mark. While we have gold and silver, which are behaving well, platinum is not. Now, I will say this, is that we did have a nice rally off of the August-September lows up to a November high of 83.11. What I think is happening here is that we are pulling back. We're going to do one of two things, actually one of three things. One, we hold here. I put an arrow down here for a reason, and it's to mark what was a prior support level back here in August, then became resistance in September, then later in September became support. So the question is, do we hold this support level and put in a higher low from the August lows, or do we break? And if we break, do we pull all the way back down here to 71.92 and hold that support level? That could be a good entry point. But if we fail, if we break down below 71.92, you need to avoid these shares like the plague. If you buy here at this support level, anticipating that it's going to hold, I would use a stop right below Monday's lows and get out. Because in all probability, we're coming down here to 71.92. Daily chart. On a daily basis, RSI, not looking pretty. Lower highs, lower lows. We had a head and shoulders set up on price. Left shoulder, head, right shoulder. Here's the neckline, which will at some point in time in the future become resistance. We did rally off the lows of the day today. Volume was slightly above average. Lower highs on ultimate oscillator. I don't see a compelling reason to buy right now. What I would do here is this. If you want to buy these shares, buy on a close above this upper band of resistance. I would nibble. Because if we break out, there's a strong probability that we're going to simply pull back, retest either this upper band of resistance, which should then act as support, or this current support level will retest yet again. If it holds, you nibble more. And then as we begin to rally up and through resistance, you want to buy a little bit more. Then ultimately, when you rally up and through this upper band of resistance here, and especially $78 per share, you want to buy more. Now, a longer term, if these shares rally up and through 83.11, new bull market on platinum. But right now, it's a show me, well, in this case, ETF, not a show me stock, a show me ETF. It's got to show us that it wants to hold support, that it's worthy of your investment dollar by being able to begin to break out above this upper band of resistance and ideally on good up volume. Right now, to me, it's simply a watch. VXUS, this is a total international stock ETF. Weekly chart. A lot of technical damage has been done here. We have gapped down this week. We were trying to hold. You can barely see it here in blue. And it happens to coincide as well with the 200-period moving average, a support level, which has now failed. Now, the week isn't over yet. We could rally back. We could close positive. We can close back above support. But at current, it is what it is. We put in a new weekly low. Therefore, the path of least resistance remains to the downside. We do have support below here at 47.93. MACD is very extended to the downside. Daily chart. So we undercut the October lows and held. Stokes are still declining down below the 50 level. As I always like to say, when you see a situation like this, we have both lines on Stokes trading down below 50. Rallies tend to fade. We still have big down volume. I don't see a compelling reason to buy these shares right now. Back to the weekly chart for a moment. I would really wait to see whether or not we hold on to this support level. I don't like all of this resistance above. And even if you bought the shares where we closed on Monday at 48.22, you're gonna have stiff resistance up at $49 per share. So you have a lot of risk, but not a lot of reward were you to buy the shares right now. Now, were I long, would I dump the shares right now? Perhaps not. I use a stop right below the week's lows, which is at current 47.69. If we close down below 47.93, we're going a lot lower. So I wouldn't buy here. I wouldn't necessarily sell. I would wait to see if we breach support at 47.93. The last chart up, LABU, daily chart. On Monday, we flashed a bullish key reversal bar. Let's update this chart. Yuck. On RSI. That's not a good way to start off an analysis with a guy saying yuck. Let's see what else we got here. Okay. Volume was nice. All right. So we had a bullish key reversal on Monday. A potential higher low here. I would be okay with scratching the itch on LABU, assuming, of course, we don't gap down. I would be okay. I mean, when I say gap down, I mean gap down below this lower band of support. I would be okay with purchasing the shares with a stop right below Monday's lows. If we fail to hold the support level, we'll probably come down to this prior low here. I wouldn't want to be a part of that until it got down to that level. And that would add more if we rally up and through this pivot point at 58.19. Now, the warning flag here is that we have both lines on Stokes trading down below 50. That's a concern. Rallies tend to fade. And we have a breakdown on RSI, and it's trading down below 50. Volume was good. So LAB looking interesting as a potential long trade. Let's take a look at the 4-hour chart. Okay, so we have an interesting setup here. On a 4-hour chart, we have a breakout on RSI. We have a breakout on price. What I think is going to happen here is that we'll probably get a pullback this morning down to $44 per share. Now, it's early yet. Could be wrong. We could gap up for all I know. But the ideal situation, the way I'm looking at this chart right now, is that I'd like to see a pullback to $44 per share. That would mean that we are retesting this breakout point. And if we hold and we begin to rally off of that level and we break out and above the 46.40 level, I would add more to my trade, because now we're beginning to put in higher highs after retesting a support level. So that's the way I would trade LABU. And that is it for this morning, folks. Everybody have a really profitable trading day, and I'll talk to you soon. Hey, folks, just a really quick thank you for watching this far into the video. I appreciate it so much. And a quick reminder, don't forget about our 1-year gold membership raffle. That's a $1,164 value. And all you need to do is just click the subscribe button, click the like button, and you're entered. That's it. And we'll announce the winner on January the 5th, 2019. I'll see you there. And if you have any questions, leave a comment below.